Hello traders, welcome to a new trading day. My name is Somia Aviagbo, a market analyst at Grove Exchange, and today is 11th May 2022. It's another beautiful morning to look at the financial market. So overall, this we've seen sluggish movement on the currencies. But the cryptos and the commodities continue to plunge. We've seen more volatilities in that space, in those two spaces, cryptos and commodities, more than what we've had so far in the forex market. Equities also continue to plunge, but it seems we are finding some kind of base. Maybe we could see a rebound at some point this week, so we'll have to see that. Okay, so today we're expecting the April CPI data from the US. Maybe that could trigger some move finally this week in the different markets, especially the FX market. So the CPI is expected at 0.2% for last month, against 1.2% that we had in the previous month. So that's the market is expecting the inflation figures to drop. So one can really specifically predict how the market is going to react to CPI, but in just the at the face value, something that is, if the CPI figure, the release CPI figure, is more than 0.2%, if it's very much more than 0.2%, that might make the market might feel that that might trigger a lot more aggressiveness with the Fed, and so we might see the dollar go higher and the S&P 500 and other equities drop lower. And so if the CPI actually is very well beyond our expectation, well below 0.2%, okay, or maybe even we're able to get a negative figure, so that means the S&P 500 can start some rebound, and other high beta risk asset might start some rebound, while the dollar might fall. So like I said earlier, well, it's not really going to be that very easy the way the market is going to react to the figures when they come out. So it's very important that traders focus on price action and what is happening on all the different asset classes. So I'm going to start with the volatility index and the S&P 500 today, because that's where I usually used to measure risk sentiment from a technical point of view. So volatility index is still very much around this boundary. So if you take things backward, we could see that the volatility since November 2021 is very much closer to what we had just after the COVID, the market relaxed from COVID, shut down from the COVID crash. So it seems we are getting a much better volatility than we have between February 2021 and November 2021, and we can see the shift in the boundaries in the range. Okay, so the range has shifted, which means volatility is increasing. It's getting into this region. Well, if the S&P 500 and the risk asset are going to rebound, I think we're going to see another decline back into this place. But if not, the market is going to maybe break above this range and then create another lower boundary and upper boundary. Okay, so that's just the way I'm looking at this. If the price if the volatility index drops back to this place, then I think we might be able to maintain this range. But if it goes above, it means that volatility is going to increase, and we just will have to see whether this is still going to be the base, or we're going to see another base created with just another upper range. Okay, so with that now, it all depends on whatever that's going to trigger the next move. Yeah, it all depends on that. So we're going to see what the CPI figure is going to come out today, but in my own technical view, I think we might start seeing some rebound from here. So the S&P 500 seems to have completed this corrective structure. Okay, this corrective structure with the base of this channel line, with this channel line providing some kind of base. So price dropped below 4,000 for the first time in a year, and so I think we might see some rebound here, but the market needs a trigger, or else we're going to see a further crash below 3,900, maybe to even lower levels, and things are going to just get out of hand for equity, for the equities. Okay, but we just really have to see, and it's still very important we keep our eyes on the VIX, because a big spike above there will mean that S&P 500 will collapse. But we'll see if this upper boundary continues to hold, and then we'll see some move maybe back to this 25 level or something, and then we should be able to see the S&P 500 also move higher. Okay, so that's it. And then from a lower time frame, let's look at the 1 hour time frame and see, like what I've been pointing out in the last update I did earlier this week. We need to see a corrective price pattern around here, around this base here. I believe prices are the base, so we need to see a corrective price pattern. So currently, what we're having with what we're having here, perhaps we might see maybe an ending diagonal or something like that. We just need something to hold on to, but ultimately we need to see price making a sharp reaction above here, or maybe a sharp break above here, above this trend line here. Okay, so if you're able to see that, then there is going to be a very high likelihood of the correction. So first to 4,161, maybe it could go as high as 4,300. So we now have to see what happens within the VIX. If the VIX collapses to this place quickly, and then bounces again, maybe we're going to see more collapse. So it's still left to be seen what is going to be the trigger and how the market is going to react to them this week and next week. So the market is still bearish. It needs a trigger upwards or a trigger to say that, yeah, we are really going, things are going to get worse for the equities. Okay, so let's look at the dollar. Now the dollar is still struggling around the 104 level, and just like I said in the earlier videos this week, we're kind of seeing some reversal signal here at this very key resistance level. So if we see a massive break, especially with the CPI figure coming today, I think we're going to see a touch of 102.35 or maybe even 100.97 in a very nice corrective manner. Okay, something like this could happen. Maybe price could now bounce from there to go upwards, but to me it seems the dollar is very much overbought, and is the bulls are really getting very much exhausted, and maybe there's going to be a relaxation, okay, in the dollar before it continues to go up. So that's very much likely. So apart from this, they are gonna, if the price doesn't make it, there's also the possibility of having this this head and shoulder structure. Price breaks downwards and then touch here, make some correction, and then touch here, maybe before it start pushing up. Okay, so that's something to keep in mind for the dollar. And so we're going to use that to see what happened on the other currencies, on the currency pairs, major currencies. So in the last pardon me for that, in the last videos I looked at two scenarios for the euro dollar. So price drop, and then we're starting to see a very nice range. So two things: price breaks below here around 1.05 and goes back to goes down to 1.04, 1.035, or price completes this triangle. It might have completed it here and breaks above 1.06, and then continues the correction, bullish correction, back to up to 1.07. Okay, so these are the two very clean and clear scenarios I'm looking at on the euro US dollar. And on the pound dollar, I'm also expecting further push upwards. So I was talking about this trend line in the yesterday video, that price needs to break above this trend line, because there is a very high likelihood of seeing a correction that could go as high as 1.25. okay, but like I said earlier, we still need an important trigger, which the CPI might be might contribute to. Okay, so we have this very nice bullish candle, and then we have this low at 1.2260. So the second scenario is, if instead of price making this bullish correction before it dumps, we might actually see if the price breaks below here, instead, then that's going to mean further downward move. Okay, so that's it for the GBP dollar, but I'm more lean towards the further bullish correction. So if I'm going to trade anything here, I'm going to wait for this bullish correction to end, okay, before I sell further. So that's just the way I'm looking at it, but that's nothing bad. Taking trades when price breaks below here, do some scalping or take some minor profit here and there, or maybe if price eventually breaks here, there's nothing bad in taking some 30, 40, 50 pips up to 1.25. So there's nothing bad in that at all, but we need to see clarity. We need to see a break of here, a clear break below here, and a clear break above here, and then some volatility. So let's look at the dollar yen. The dollar yen continues the upward move, but continues the downward correction, which might still go deeper. So we have a price for the nearest support is around 128.61, and up to the from that support to the current top, to the most recent top, the price has corrected about 50% of that, might go lower to 61.8. But if we see okay, let's go to lower time frame. Okay, so I was looking at this particular trend line. It might provide support together with the 61.8. So price comes here and then breaks above here. That's going to be further rally, right? That's going to be further rally up to 131.5, 132, 132.5. Okay, which means that the dollar may continue the dominance. Okay, but at the top here is an ending diagonal, just like I said in the last one. All right, which might of course head around 132 or 132.5. So we should put that in mind in case price gets here, okay, because further decline, a much bigger decline can happen from there. Okay, on the other hand, if the price breaks below here, it means that the correction is going to go deeper, and we will see a break below here. So that means it's really very likely that the diagonal has already ended and price is reacting to it. So that means further decline to 126 is very much likely, and we can start looking at short-term bearish opportunities on the dollar yen. So on gold broke below this key level, just like we said yesterday, for most of this week. So we're looking at two scenarios. It's either price breaks above this trend line to give us a higher B, or price breaks below here to take itself back to 18, down to 1818. And so since that break, price has done, since this first candle broke below the this one, price has done like 160 by close to about 170 pips, okay, which is quite decent. And now we are seeing a move back into this region, which means this is a kind of fake breakout. And so if the price goes up here, so we can maybe wait for some correction up to this place and then further bullish opportunity. Okay, so because if this is what the price is trying to do, I think I might just adjust my my analysis like this, that this is fourth, okay, and this is fifth, and price is trying to make a fresh ABC correction. Okay, the implication of this is that a very strong a much stronger bullish correction could happen to 1930 or 1940, but we just really have to see. So we see the first breakout, an impulsive manner, we wait for correction back to around that 1850, all right, and then look for a bullish opportunity. Okay, so that's it about gold. And then Bitcoin continued to plunge, and then currently we're seeing this sideways move, which is another opportunity to get in. Just like I said, the best way to trade Bitcoin is to wait for corrections, just like we saw in many times, which led to further decline. So what we're currently seeing here is a correction, which is also another corrective pattern, right? This is a triangle. That's a triangle there, and so maybe a little bit push, because triangles, they usually have 5 legs, 1 2 3 4 5. So if that happens, maybe a little bit above, maybe around 31,500 or 32,000, maybe even below, and price breaks below here, that's going to be another opportunity to short to 28,850, which is the first target for this bearish run, and maybe even 23,000, which is the second target for this bearish run. All right, so that's it about Bitcoin. So let's look at the dollar CHF, and the dollar CHF is also showing some sign of reversal at the top. Okay, maybe this head and shoulder, right? And so price might break below the neckline, okay, which is a sign of weakness, right? So just like we see, we can see on the dollar as well. So a break below here will mean that we might see a touch of 98.26 and maybe even 97.20, or maybe around that 97. Okay, so that's if price breaks below here. So we have to watch for that for the dollar yen. So it looks quite bearish, but we need to see a breakout. Okay, otherwise this might just be yes, a triangle. That might just be a triangle if there's no reasonable breakout. So that's going to be A, B, that's A, B, C, D, E. So if there's no reasonable breakout and instead price react with a break above here, then that means further buys up to 1.00, okay, which is a very key level. Okay, so that's the dollar chart there. And then New Zealand US dollar, we should be seeing some kind of rebound on that. Yes, a rebound. So we just really want to see how this rebound is going to go. So the rebound has started. So there are two ways to this. Price continues the correction up to 0.64, or it collapses again. Okay, just like we saw many times, price made this kind of corrective move. So currently the price does not really look impulsive to me, and so that's a red flag so far, okay, to this bullish run. But of course we can still see sluggish corrective move. All right, sluggish move up to the level we are looking at, but why the price is making all this corrective move, if we see an impulsive break, see some impulsive candle break down, I mean deep into this level, then that could actually mean further sell-off to 0.6250. all right, so another thing is well, we should also take note of the ending diagonal pattern that might happen here. Okay, so that's I will be more confident if that happens, okay, of the further bullish run. So if the price comes right here, okay, to complete this, yeah, I'm going to be much more confident because I love diagonals pattern a lot. They are very strong, they're very powerful. So we might see a push to 64 or maybe even 64, 5, 6, depend on whether this is going to be a correction, a minor shift in sentiment, or it's going to be a total change of market structure, okay, with S&P 500 pushing higher, because this New Zealand US dollar and Aussie dollar, they follow the S&P 500 so much, they have this very strong positive correlation as high beta effects. Okay, so that's it about this about New Zealand US dollar. So similar case should be for Aussie dollar. So the Aussie dollar is also making a minor correction, yeah, but seems we're not getting a clean diagonal pattern in this case. But just like I said for Aussie dollar, if you also see a sharp break downwards here, all right, that means that could actually lead to further decline. Another way to look at this is maybe a triangle pattern. So when the price is making correction like this, we have to look at all the different possibilities, okay, anyway the market is going to move, because this is not looking impulsive. Okay, I didn't mean we saw a very sharp impulsive move. Okay, cool, we'll have anticipated a minor decline and look for further bullish opportunities. So until we see the volatility here getting stronger, this is still looking very much corrective. All right, it's still very much looking corrective. And then for dollar card, the dollar card is making this a nice correction up to this, but this is an ABC correction, right? Okay, so we have this correction here. So because of the oil price that is falling, we've seen we might actually see some card getting some momentum, some bullish momentum, which means I mean, we might actually see we've been seeing the card falling, which is one of the things that is keeping the USD card up, okay, together with the strong US dollar. All right, so if we continue to see the oil price dropping, which is very much expected, then USD card might actually push upwards. Okay, so with what we are seeing here now, it looks like we're getting another like this. All right, price broke above this one. If price breaks above this one too, I think we might get further push to 30, 70 or something like that. But just like we have for dollar yen, it's very important that we watch out for the diagonal. All right. So price might come up here, react, and then slump. Okay. So these are the things to take note of. And if the price breaks above, if this move breaks below here, then I think we can confirm that this has ended right here, and then we can look forward to more decline to 1.29, 1.288, 1.285 on all those levels. So the markets are getting clearer now. So what we need is to see where the breakout happens, okay, where the next sentiment shift is tilting towards, okay, before we get in. So we need to wait for the price to show us where it's going. No need to predict. And so that's it from me today. Those are the instruments I want to share with you today. So thank you very much for listening. I'm gonna see you in the next one. So the CPI is coming later today, so catch you later. Bye.